Okay, so this little snippet is going to be about call structure. Um, there's resources that are available to you guys. You have the script app, you have the perfect script, you've got probably scripts coming out of your ears. It's easy to get lost in those because there's just so much information. The thing to understand is that every call has the same components, just in a different order. So we're going to go through a call structure as it relates to mortgage protection. And this could be a meeting that you have with a family member. It could be a lead that you're getting, a referral. It doesn't really matter. It's always the same information every single time. So once you grasp that, then you can kind of have like a little mental checklist. Like, did I get this? Did I get this? Did I get this? If you're skipping some of this stuff, you're going to run into issues at close. So the first piece of the call structure goes, there's opening, there's a credibility layer, you lower their guard, you give them a little bit of information, you set expectations, you go through their health background, you touch on their finances and assets, you close on budget, which means you get budget confirmation, you do a case design, you walk through healthy person's window, and then you do your closing prep, and then you present. And that's it every single time. So now that might be in a different order. If it's an aged lead, an aged mortgage lead, you're going to go opening, credibility, health information. So it's probably actually opening, credibility, lower guard, health information. And then once you get through health information, then it's like the why, which I guess I forgot to put that on there. Lower guard is kind of the why. Um, you'll just do them in a different order because with an aged lead, you're trying to figure out, can this person qualify for something? There's a ton of nuance, so I'm trying to just keep it simple. But the call structure, we're going to go through just a mortgage protection or a fresh Google lead because it's pretty much the same thing. Your opening is either, hey, I'm just getting back to you about da 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 da, or it's, hi, yeah, I'm just calling for our appointment. Okay, great. And tell me what got you looking into mortgage protection. And then, okay, great. I've got date of birth is this. And what's your mortgage amount? Okay, fantastic. And how many years do you have left? Okay, perfect. And I see you've got your beneficiary as Lucinda. Is that your wife? Okay, great. So now tell me, have you ever looked? Now that's the credibility. So your credibility is you're repeating back to them information that they've put into the lead. That gives them credibility, right? That links them back to like, this person has my information. This must be the person I'm supposed to be talking to. That is credibility. Does that make sense? When you go into lower your guard, you say, okay, have you ever looked into this before? And they'll say, no, I haven't. Or yes, I have. If they say, yes, I have, it's a different branch, which we'll get into that later. If they say they're 99% of the time, they say, no, I haven't. You say, okay. So again, my name's Dustin. I'm going to build a little more credibility and I'm going to lower the guard. My name's Dustin. I'm a senior advisor here at Pinnacle. We do retirement income planning, estate planning, and then family and asset protection planning, which is the mortgage protection piece. So if you have any questions on trust, wills, how to maximize retirement income, any of that stuff, just feel free to ask. Okay. Now, the way that I usually like to start these calls is by first understanding your status quo, because this, you may not need this protection. You may not need it. There may be another way to make sure your family's protected without paying an insurance carrier. And if we can figure that out first, we'll save you some money and both of us some time. Does that sound fair? Okay, so it's okay if I ask you a couple questions to get to know you a bit, and then we'll go from there. Then they're like, yeah, okay, great. So now you've lowered their guard. Um, then you'll proceed into the why, which is should be on the little bullet point, but you'll go into the why. The why is there to uncover like why are we here? What you're doing in the why is you're also uncovering who the beneficiary is. This is where you're going to define the client archetype so you know who you're talking to and what their incentives, motivations are. Uh, and you're really going to try to get at that really core reason of why they want or need the coverage, right? The why is your fuel for closing. If you go light on the why and you don't get through, like, I will typically go light on the why up front and then retouch on it and get further into it as I go through the conversation. But I do not try to close until I've got a really firm grasp on the why. Otherwise, it's like taking a half court shot And y'all know what that feels like. It's like, oh yeah, okay, this person just asking for numbers. I'm not getting anything out of it. I might as well give them the number and see what happens. And 10% of the time it works, but 90% of the time it doesn't. So you go through you get into the why to get to that person's core need. Because remember, all sales is meeting a need with a solution. That's it. Right. So sales is uncovering, figuring out what your need is, and then figuring out how to position your solution so that it solves that need. If we don't know what the need is, there's no way we know how to position the solution. We're all on the same page on that. Yes. Yes. Okay. Uh, from there, you'll go, okay, so this is making total sense. And the reason that I save the information piece until after the why is so that you can then frame how the programs work so it appeals to their why. For example, if you have a client that is just wanting to make sure that their spouse is protected, I'm going to go into, okay, so there's three ways that these programs work. It can either pay off the mortgage, it can pay down the mortgage, or it can pay for the mortgage. Okay, so yes, it can pay it off. There's a zero balance. Hardly any families in your circumstances do that. What most families do is they either pay down the mortgage so the spouse can refinance the home and bring the payment down to a level that's affordable, or in a lot of cases, surviving spouses don't stay in the home for more than 2 to 3 years anyway. So they'll pay for the mortgage plus transition expenses just to make that process as easy for their spouse as possible. That's what most families in your circumstances do. What am I doing by saying that? I'm trying to sell them off of wanting to pay off the whole house, right?
And people want to follow the majority. That's
100%. You're creating social pressure. You're also establishing expertise because you're saying what most families do. You're presenting them with something. And like, if you think about it, the salesperson that most people deal with, the salesperson is trying to maximize. They're trying to get the highest payment possible, right? They're trying to sell you the thing that pays off the whole house. We're actually downselling here. Just say, hey, we're going to take a look at that. We could certainly do it. But in most cases, there's just more cost effective ways to accomplish the goal that you mentioned, which is just making sure that your spouse is okay. And there's no real reason for us to spend unnecessary money, given that, most of my clients are on fixed income and money's tight. So we all know that Social Security doesn't keep up with inflation. And so if we can save a little bit of money on our monthly payment, but still accomplish the goal of making sure that Susan's okay, that's a win-win, isn't it? Yeah, of course it is. So we'll look at all options, but most clients in your circumstances go with the latter too. You're positioning the solution early on as it relates to their why instead of just rolling right through it, right? So on the flip side of that, if it's an inheritance case, I'm going to do the same thing, but I'm going to say most families in your position don't pay the home off. I mean, unless is your child living there? No, they're not. Okay. Would they move into the home? Huh? Do they own their own home? I'm understanding about the beneficiary, which I would have covered in the why. But once you know that stuff, then when you say now these can pay off, they can pay down, they can pay for, I say most families that are looking to just pass the home to their heirs, they'll just pay for the mortgage because in most cases the kids already have a home of their own. They're just going to sell the house. And so you don't want it to be a burden for them. And I totally understand that. But it not being a burden for them really just means make sure the mortgage payments are covered, make sure that any repairs or fixes that need to happen on the home are covered, make sure the moving expenses are covered. And that's it. And that's substantially more affordable than paying off the whole house, right? The only difference between paying off the house and paying for the mortgage is the net cash they'll receive once the house is sold. So if your house, which we would already know this, is worth a 500,000 today, and in 10 years it's going to be worth 800,000, you only owe 150. So the only difference in paying it off is whether your kids get 700,000 or 850,000. Both are a pretty big number, wouldn't you agree? So again, we get into the information where we're telling them what the programs do, but we're selling them off of paying off the whole house and we're positioning it specific to that client frame. Everyone with me? Okay. Okay. On the other side of that, you got housing continuity and you've got care continuity. Care continuity is the only one that they need to pay off the house. But we get into information after that so we can start positioning the solution for their certain circumstances, which we're selling them off of paying off the whole house. So we don't run into that case where they're like, I just want to pay the house off. We gave them all the reasons that they don't have to do that, right? Once we're through information, then we go into expectations. Okay, so what we're going to do is we're going to spend a couple minutes going through your health background because your health background is what's going to determine what programs we qualify for and the price of those programs. We're going to spend a couple minutes talking or touching on your finances because everybody knows what they can afford today comfortably, but it's really hard for most people to know what's going to be affordable 10 years from now, especially since Social Security doesn't keep up with inflation. So when we go through your finances, I'm going to do an inflation adjusted budget. So I make sure that whatever we look at isn't just going to be comfortable today, it's going to be comfortable 10, 15, and 20 years from now. Does that sound fair? Okay. Is it okay if I ask you some health questions so we can figure out what we qualify for? Yeah. Okay, great. And now we're going through the health FI. We get into the financial FI, and this has three main components: working status and income for the household, assets that exist. So, hey, do you have anything that your spouse is also listed as a beneficiary on? Do you have like an IRA, 401k, or private life insurance? This is for either understanding, are we going to get hit with some $100,000 policy we didn't know about that we needed to build into the plan? And do they have money that's good for an annuity set? We'll go through that. We'll get down to discretionary budget, and then we close on budget. We close on price bands. So we present price bands. We're just really trying to narrow down budget range. And then once we have them budget range, okay, so I just want to make sure I understand if we can find a program that will make sure the mortgage is paid for enough time for your family to sell the home without any out-of-pocket expenses, and we can stay within 150 to $300 a month. Is that kind of exactly what you're looking for? That's a soft close. We close on budget and then we soft close on, if I can do this within this range, is that what you're looking for? And if you get a yes there, oh, dude, you're set. But where most junior agents will get tripped up is they will get too excited too early, and they'll skip the next most important piece, which is the closing prep. Closing prep is you return from the hold, and if you have to go on hold to price it out, whatever. Before you present options, you need to go through closing prep. This is okay. Do you have something to write with? If not, go ahead and grab something. There's going to be a few things you're going to want to write down. It's a good time to go through healthy person's window. The great news is that you're in the healthy person's window. Do you know what that is? The whole purpose of healthy person's window is to create urgency. Have you ever heard of that? No. Well, healthy person's window, it's kind of just like a window, right? We know the windows open and they close. And for you, like, we know exactly what your health conditions are today, but have you ever had somebody in your life that you talked to them on Friday and then on Saturday they're in the hospital out of nowhere? Yeah, windows can close pretty suddenly. And it's because health is wildly unpredictable. So we don't get a notification 3 days in advance that we're going to have chest pain or a heart attack or a mini stroke or that we're going to end up in the hospital. If we did, things would work very differently. Instead, we wake up one morning and we don't feel right. And next thing we know, we're in the hospital having an MRI or a CAT scan or a CT scan or whatever it is. We just wake up with a pain or we notice it in the middle of the day, whatever it is. So the healthy person's window is about, we know exactly what your health conditions are today. And so we're going to go through these. And if one of these options meets, it does everything that we want it to do and it stays within budget, we'll submit an application for an approval. All right. And that approval is going to now, once you're approved, you own it. That means that no matter what happens with your health after that, you're already approved. It doesn't matter. So what you're effectively doing is you're going to lock the rates we're going to lock the rates today. Have you refinanced a house before? When you lock the rate, it's the same thing. Then it doesn't matter what the market does. Your rate is locked. This is the same thing. A mini stroke would be like bankruptcy, or it would be like rates skyrocketing. What we want to do is lock in the rate while we're in the healthy person's window so that no matter what happens, this is secure. Does that make sense? Okay, great. Now, then that's healthy person's window. Now we go into the final close prep. Now, we're going to walk through a few main things. We're going to say, now again, there's a few things I'm required to give you by law. First thing is my first and last name. Go ahead and write this down. My first name is Dustin, last name is Milner. Next is my federal license number. That's 216, whatever your NPN is. Lastly is my cell phone. And I only give this out to my clients, but this is the number you're going to share with your family, Because when that day comes, the last thing that we want them worried about is calling the carrier and having to deal with the claims process. Instead, all they have to do is call me. I will handle everything with the carrier for them so that they can spend their time reminiscing in the photo album, not stressing out over the checkbook. Okay. Okay, great. Now we're going to go through three options. So that's the first piece is your information. And it's just that last bit of value add in terms of they're going to call me. I'm going to handle this for them. Okay. I'm your guy. I'm going to be your guy for life. That's the last value add on you. It's a service value add. The next bit is value add into the policy. Remember, this whole section is all the entire structure of the call is about building momentum and building value into the option that you're going to present, right? So we've uncovered the why. We know what the need is. Now we need to build value so that price compared to value seems insignificant. Okay, so we're going to go into build value. We're going to say now everything we're going to look at, these are all permanent. So I want you to write that. They're fixed. They're going to build cash value. But here's the beautiful thing. Every single one of them is going to make sure that your son will get the home without having to worry about pressure from the bank and without having to come out of pocket, no matter what the economic circumstances are, no matter if he lost his job, no matter what, he will have the financial resources to make sure that this legacy you've built in this home is going to go to him. Or no matter what, your spouse is going to have the financial resources to navigate what will be the most difficult chapter of her life with grace. You're going to touch on that. And you can go further into this. You can say, this is what it's going to create, this is what it's going to prevent. Like you can go as far into it as you want to go. That's your own style. But if you skip recapping the why and you skip building the value, you're not going to get as high of a close rate. Like if you skip this is my name, this is my phone number, this is my NPN. Let me recap the why, let me build value. Really, I like it. Build value, then recap the why right before you present numbers so it's fresh in their mind. If you skip those things, you're not going to get that many yeses. Okay, then when you present the options, the first option should be you guys should know this. Where's the first option? Very top of the budget range or even a little more. You want to bounce the head off the ceiling, set a high anchor. Second option is the one you want them to go with. Third option is your safety net. It still gets some level of the coverage done. Family's still okay, but you know they can afford it. And then it's okay. Now, out of those, this is some nuance. If you're presenting to a husband and wife, after you give them the three options, you say, hey guys, listen, I've drank way too much coffee today. Would it be okay if I just put you on hold for a moment? You guys can chat amongst yourselves. I'm just going to run to the little boys' room or little girls' room, and I'll be right back. And then you can put the phone on mute. They're gonna go talk about everything. Choose to listen to it or choose not to, whatever. And then after a minute or two, you come back and like, okay, so now that you guys have had a chance to talk about this, do you have any questions? No? Okay, great. Now, which of those options let you rest your head on the pillow at night, knowing that your family's safe, secure, and protected, but it's also not going to break the bank? They'll tell you an option. Okay, now that's going to be affordable for you, right? That's not going to take any food off the table. Okay, now do you have your driver's license handy? Like, I don't ask if they want to move forward with the application. I usually just say, okay, great. Do you have your driver's license with you? We're going to submit the application. You've already set that, right? It's the assumptive close. So you assume the close. Do you have your driver's license? The reason I like to start with that is it usually requires them to go get it or dig it out of their wallet, which gives you some time to pull up the application with the carrier. And so it just buys you a little bit of time. If you're having technical difficulties, there are some primary things that you must get. The first thing is you should have their first name, last name. You should have their date of birth. You must get driver's license number. If you want to be an overachiever, get the expiration date too. You need to find out what state they're born in. You need to get their home address. You want to make sure you've got the beneficiary first name, last name, date of birth. Ask them who their primary care physician is and the last time they saw them. All you need is city, state on that. And then you need social and banking, and that's it. So if you're having technical difficulties, you can't get the app open or you can't figure it out, you go right into it. Okay, it's this, da 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 da. And you could even go so far as to like ask them the underwriting questions again. Okay, and just to confirm, there's no heart attacks, right? We have no strokes, there's no Alzheimer's, we don't have any HIV, you're not planning on robbing any banks, we don't have any felonies, right? Okay, great. And what is the bank, if we get approved, what bank do you want to use to make the payment? I don't usually like to do that until after they've gotten the HIPAA from the carrier, because like asking them for banking if they haven't had something come from a carrier is kind of weird and you can lose it. But if you have to, you have to. When asking for the social, we're way out of the call structure, but whatever. When asking for the social, ask it like what, like it's, I need to know your favorite color. Okay, hey Matt, and what's your favorite color? Like, okay, great. And what's your social? Like, it's not a big thing. Don't make it a big thing. It only becomes a big thing if you think it's a big thing. If you don't think it's a big thing, it's really not. And most people will throw socials out left and right without even thinking. So when it comes to that and you're in the application, if you're feeling nervous about it, what I usually like to do is I'll say, okay, great. And I've got your name, it's spelled this way. I've got your email address, I've got your date of birth, and then this is your home address. Okay, great. And what's your social? So you get them in the motion of like, okay, yep, confirmed, yeah, confirmed. Okay, great. And what's your social? And then they just blah, it just comes out. Okay. I think that's it on call structure. Now, again, those can go a little differently. There's obviously then objection handling there at the end. You can also choose, if you do healthy person's window, it's easiest to set the, you're going to own the application and then you can layer on the, and by the way, like that application or you owning the approval, that means that doesn't even mean you're committed to anything. What that means is that we're approved. When we submit the application, we'll have to, in order to get that approval, you're not going to be committed to anything, but we will have to disclose the how we want to make the payment or they won't even underwrite it. But you and I are going to set, before we get off this call, we're going to set a follow-on meeting and it's going to be our decision meeting. In the decision meeting, we'll do one of three things. We'll either choose to decline the coverage, which means I'm on the phone with the carrier the next morning saying, hey, thanks, but no thanks. We'll choose to change the coverage. You may want to move it up or down after you guys talk a little further, and that's perfectly okay. Or we'll just choose to accept it as is. No matter what we choose, I'm on the phone with the carrier next morning, letting them know of our decision. Does that make sense? We're on the same page? Okay, great. And you're off. Okay, I'm gonna leave it recording. Any questions?
How often are you setting that follow-up meeting? Or do you feel like you need to set up that follow-up decision meeting?
50-50.
Okay.
It just depends on
Yeah.
the client. If like if I can tell the client is wavering a little bit, like they're a little iffy, they're like, I don't know. You know, if I'm not getting the client to really open up, then I'm probably using that.
Yeah.
If I can get the client to open up and I know that the client trusts me, then I'm like, I'll say, hey, and I'm going to save that for if I get any kind of pushback when we go into the application, or I'll save it for when we get to banking. I'll say, hey, if we get approved, when would you want this to start? What I would suggest is like, there's multiple different theories of thought on this. Some are have them pay it right away. My thesis and philosophy has always been align it to whatever's most convenient for them and give them a little bit of time. It takes some pressure off. That's a personal decision. Um, Folks that are calling the age leads will primarily make them do it at that, like payments coming out tomorrow, because they don't want to give the person time to think about it. I think that has to do more with intent than it does anything else. It's like if they call the person out of the blue and it's a one call close, they don't want this person to have time to think about it. So it's like, yeah, no, we're making that payment today. If it's the leads that I work are a little higher intent, so I feel comfortable having like setting the payment out a couple weeks from now. And I can count on one hand the amount of times that like somebody's called me back and said, no, I don't want to do it. So it doesn't happen that often.